Welcome to the 41st installment in Trading Strategy Guide's Trading Education Series. Today we're going to look at one of my very favorites, the volume indicator. Let's kick this thing off. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. I apologize if my voice is a little gravelly. I've just got a little bit of congestion. In today's video, we're going to discuss the volume indicator. There's a whole lot I want to say about the volume indicator, so I'm going to take two installments to cover it. The first part is about how to use the volume itself, and the second part will cover some quirks of volume indicators. I'm pretty sure all you guys know what a volume indicator is, but just in case there are a few out there that don't, I'll take a second to bring everyone up to speed. The typical volume indicator is a histogram that shows how many shares, lots, or contracts of a particular market were traded during the time slice in question. So if we're looking at a daily chart, each line of the volume histogram would represent the number of contracts or shares or whatever that changed hands in that market during that particular day. If it were a 1-hour chart, each line would represent the contracts moved for that hour, a 15-minute chart for that 15 minutes, and so on. I have my volume indicator set so the color of the histogram bar corresponds with the color of the candle. Other people do other color schemes. I just find this one is easiest for me to identify when a volume bar represents bullish volume or one that represents bearish volume. Okay, so that's all well and good. It's nice to know how popular a market is, right? But what does the volume actually tell us? What the volume is really telling us is the importance of that particular price move in the grand scheme of things. For example, you guys that follow this channel know that I trade breakouts from consolidation patterns. When I look for a consolidation pattern, I'm not looking for a perfectly shaped triangle or flag. I'm looking for the rough pattern, and then I'm looking at the volume and price volatility that went along with that pattern. I discussed the volatility part of the strategy a few videos back when we were looking at the ATR indicator. If you missed that video, you can find a link below. What I look for in the volume indicator is a decline in the volume that corresponds to the pattern in the price chart. A decline in volume indicates that traders are getting bored with the consolidation and are so done with it. Fewer and fewer traders are getting on board with the consolidation and are waiting for it to finally break. I've seen some almost perfectly symmetrical patterns that don't have volume and volatility support, and I just set them aside. Of course, I continue to watch them because sometimes I just found the patterns too soon and they just weren't at that right point yet. But the volume decline is, in my opinion, the most important aspect of the consolidation breakout strategy. As I've said before, beauty and symmetry are not crucial to the effectiveness of the patterns, and the same applies to the volume histogram. Do not expect it to go from 10 to 9 to 8 to 7 and so on. Sometimes you have to sort of pull back from the chart and squint a little bit to see the decline in the volume. But just like the price action, the volume will breathe in and out. But you can expect it to make lower highs and lower lows as it declines. Adding a volume average may help you see the decline for longer term patterns. But remember, a 20-period moving average is going to lag by about 10 or 15 periods. So if your pattern is small, the average may not show the decline right away. When the consolidation finally breaks out, I like to see a spike in the volume, as if all those traders that got bored finally got cranked up and jumped on the bandwagon when the price finally broke out of its sleep. Here's another situation where the volume can tell us a lot. Last week, Bitcoin attacked the 30K level right here with a big volume over a couple of days period. Apparently, a huge number of traders wanted to push it down, but it was rescued at the last minute, so to speak, right here on this candle. This happens to be a consolidation pattern, but the trick I'm about to show you will work for any support or resistance level and will help you confirm that the level is an important one. I identified this 30,000 level right here using a few techniques that we've discussed when we were talking about support and resistance. I'll link those videos below if you want to check them out. But this move right here was a strong confirmation of this level, and we can drill down and see what actually happened here. First, I'm going to drop two vertical lines on the chart, one right here and one right here. This will help me find the time frame when I drill down to the hourly chart. So let's look at the hourly chart. If you notice a discrepancy in the dates and times on the timeline, it's because the timeline on my chart shows U.S. Central Time or Chicago time, which happens to be Texas time as well. So don't be confused by that. In any case, that big red candle on the 20th of January and the push through support on the 21st are all right here, contained between these two yellow lines. Now you can see how the volume rose during the push down as a lot of traders decided to get into this move. Then you can see where the price actually pushed through the support level on this candle right here on huge bearish volume and then pushed back up on what appears to be huge bullish volume. So by drilling down to the hourly chart, we can see that much of that volume spike on the daily chart was traders wanting to push the price down. But what about the rescue here on this candle? I'm going to zoom in on this candle right now, and I want you to think about what this candle looked like as it was forming. It started right here at this point, and at some point in its life, it pushed all the way down here to this level, and it probably looked like it was going to break the 30K level. Well, it actually did break the level, but it looked like it was going to close down here below the 30K level. But then the buyers jumped in and pushed it all the way back up to here and back over the line. So before we decide that only a portion of that volume spike was about pushing the price down, let's drill down further on this. I'm going to move my vertical lines to either side of these two candles on the hourly chart, and let's drill down to the 5-minute chart and see what it looks like. Now, this chart tells a story. Most of the big volume spikes were on the downward price moves. Here, 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 and here. But there were enough buyers in the mix to push the price back up over the 30K level. What this tells us is the 30,000 level is strong, but it's weakening. And another attack at this level could possibly break it. So I'm thinking that Bitcoin is bearish. It's had a good run, and I don't doubt for a minute that it will eventually run way past 42K. But for now, I'm thinking that it's going to pull back a bit. But I've said this a lot lately, trade what you see and not what you think. So even though I've got a lot of evidence that Bitcoin is bearish, my trade plan still allows for a buy trade if it goes the other way. You can see the details of the Bitcoin plan in my Trading Picks video from January 18th. I'll include the link to that below. So the big takeaway from this video is that volume gives us a clue as to what the smart money traders are thinking are the most important price levels and directions. Keep that in mind as you build your strategies. And that's it for today's video. Next week in Volume Indicator Mastery Part 2, we'll look at the quirks of various volume indicators. And don't forget to come back Friday for my Strategy of the Week and next Monday for my Trade Picks video. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. I hope you took a few minutes to have a look at the video that I posted the other day answering a question from one of our followers. If this video helped you, smash the like below, subscribe and hit the bell if you want to be notified of our videos in the future. Have a great Wednesday, and I'll see you on Friday.